Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can follow me on Twitter and talk to me on Patreon. Alright, as you may have noticed, Tesla's stock price is not quite the same as it was about a month ago. In fact, in June, Tesla closed at $620 one day. We also saw it hit the mid-900s in a trading day on the 1st of August. Tesla is nearly up 50% from its recent bottom. Now, if you bought options, you're likely up a lot higher. You may already have a really good return. And in fact, you may now be a little worried about losing this quick profit you just made. Do you want to lock in a profit now? Or do you think you want to let it ride? Let's discuss what Tesla's stock price is doing and what strategy you might think is best for you, along with me telling you what I'm currently thinking. The stock price is still on the move. It hasn't settled down yet. It's been trying to push to $1,000, but it wasn't quite ready for that yet. The important thing is, though, that Tesla is moving, even though we're in a bear market or even officially a recession, at least by the old definition until Biden changed it. And how many comments on YouTube and Twitter have you read from these prophetic Tesla investors who understand the market and Tesla so well that they keep saying the stock price won't move in this market? Well, they were all clearly wrong. It moved a massive amount. Oh, and without really much reason either. No reason. Tesla just magically moved up all by itself. The Q2 earnings wasn't that spectacular to move the stock. Sure, it was better than expected, but only due to a Bitcoin sale. The rest of the financials were nothing too unexpected that would have moved the stock. Sure, it had bounced back into the mid-700s after finding the bottom, and then there was an in-depth earnings call on top of that, but it didn't move the stock either. But there also wasn't anything left to keep it down either. The selling had stopped. On top of that, we had short sellers who were taking profits and likely moved the stock, having to rebuy their position, and then spooked other short sellers to cover their positions, and it's highly likely that some of them moved the stock a little. Then other investors start feeling more confident investing now the stock price is higher. Investors have an inverse demand curve. They're more confident when the stock price is higher. If you can invest with a normal demand curve, then that makes you better than most. On top of that, the Twitter fiasco has also calmed down somewhat, and we're also finally out of all those Q2 issues. Of course, many of us were buying it all the way down and simply had no money left to buy the stock when it did hit the 600s. If you recall, I said I wasn't going to start buying on the dip until it broke 800 and started buying leaps all the way down to about mid-600s. Things appear to be moving well in China now, and these line upgrades are looking unbelievable, and we're hearing some crazy potential figures. The COVID cases also seem to be improving in Shanghai, so it sounds like hopefully the lockdowns are not so likely to happen. Things are progressing somewhat in Texas and Berlin too. In fact, we're hearing that Berlin is now at 3,000 vehicles a week. That's 13,000 a month, 60% the way to volume production already. Alright, it was off to a slow start, but this is a whole new manufacturing process. There are potentially going to be some unknowns that crop up, but Tesla have sorted them. That is a massive jump compared to where they were last quarter. Just to recap on the Q2 earnings deck, Gigafactory Berlin-Brandenburg reached an important milestone of over 1,000 cars produced in a single week while achieving positive gross margin during the quarter. 1,000 a week up to 3,000 a week. That's a really big jump. And it's what I was explaining when going through the earnings call. Tesla's ramping is not linear, it's an S-curve, and it looks like it just leveled up. This is actually huge, already at 3,000 a week. Considering the end of year target is 5,000 a week, i.e. volume production, it seems very achievable at this rate. And we're also seeing a lot of activity in Giga Texas, but I would say they can apply a lot of what they learned from Berlin to Texas. And the main holdback with Texas were the 4680 cells, which have now been substituted for 2170 cells, albeit scarce 2170 cells that will only help until early next year when the stockpile will be depleted. Tesla have until then to get their 4680 cell production to the necessary level, or else we start seeing a decline in production. Yes, 4680 cells, unfortunately it still comes down to that for the future success of the company, but it sounds like it will come through even if we end up seeing a slight dip in production in Q1. What would be great is if the stock price could remain below $1,000 before we actually see the 4680 cells in volume production. And if the 2025 leaps are out by then too, then I might increase my level of risk with Tesla. And we can't forget the shareholder meeting and AI day to potentially further bolster the stock price. What if Elon introduces us to a finished dojo on AI day, along with other events on the calendar? Oh right, like a stock split perhaps. Now a lot of people have been telling me that not even a stock split is going to move Tesla's stock price in this market, especially now the split is just 3-for-1, not 5. These are major events, and it looks like we even have a reasonable economy intact, or whatever you want to call it, it still seems to be moving. The last time Tesla split, the stock price went bonkers. Now, I find it hard to believe that everyone has forgotten about that reaction. So much so that I think it is preemptive. The market will be expecting a move, and it's likely going to be a game of chicken. I don't know how high the stock price might go. It will be motivated by greed, not logic. I expect it to grow and then drop more than about half however much the split pushed it. If I feel the stock price does become too overinflated, I will take some profits on some of my leaps, but only likely to sell about 1 or 2 contracts. This is my overall leap strategy, to take some profits when the returns have gone up so high. I mean, when you make 400% or so in just a few months, that's pretty good. And this is Tesla. We know what this stock price does. It's highly volatile, and there is always a good chance of it dropping again. The thing is though, even if it didn't drop again, and it shot all the way up to $2,000, as bad as it might have been to sell and miss out, I still have about 80% of my leaps, and my shares, so I won't be too upset. I'm only trading with a small fraction, but this is my strategy I'm using in order to see if I can accumulate 1,000 more Tesla shares for what was the cost of selling about 200 shares. It was really the only way of me having a chance of accumulating enough shares that it will actually make any difference to my portfolio at this stage, when compared to just buying shares with after-tax income after expenses. But I'm starting to think I have a pretty good grasp on this company now, and if I buy options out far enough, then I will be able to avoid any market manipulation and temporary drops. The more time Tesla has, then it will be exponentially larger. If I can push it out for another 2 years and leverage 3 or 4 times more, then those odds work for me. Anyway, if this split does behave reminiscent to the last, then the stock price will go up, then go down, and then go up a lot more. Which might be what Q3 and Q4 are going to do to the stock price. They could send Tesla off to the new trading range. Tesla might level up again just from these quarters. I haven't done my numbers yet, but I'm researching production and it is looking good. Do you remember when I used to tell you what Tesla's PE ratio was relative to a rough Q4 estimate I would make at the time? You know, when the stock price was below $700. Can you remember what it was? Around a PE ratio of 30. Do you think Tesla would trade at a PE ratio of 30? Plus, I actually think those Q4 numbers are going to be better than those estimates now. And of course, we probably do have to mention FSD. That might be safer than a human sometime this year. However, even if Elon announces that they've actually achieved that on AI Day, then would it even move the stock price? Or has Elon called FSD too many times? It has somewhat lost its importance. We can't say for sure all these events will move the stock price as much as we hope, but in many ways it's not important. They add value to the company. The valuation that you use in your head, we work out how much we value Tesla, and if the stock price is below our valuation, then we think it is potentially a good investment. But all these events are adding to our Tesla valuation. The market appears clueless as to what Tesla's real valuation is. But one day, all these events and improvements are going to be seen in the financials, and the market can't ignore the numbers. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.